Welcome to lesson number 3 about taxes. We are moving on to Social Security and Medicare taxes, and we're also going to look at a little bit of sample withholding to get us to the point of what our paycheck would look like. That leads into our next topic, which is budgeting. So, Social Security and Medicare taxes are actually known as FICA taxes. The Federal Insurance Contributions Act is what that stands for. And these taxes are going to be withheld from your paycheck by your employer. So, it's not even something you really have to sign up for. It's something your employer manages. Social Security is the Old Age, Disability, and Survivors Fund. So basically, what that is you are funding all of our working lives. We're putting money away into this fund that helps pay for retirement for folks, pays them out in old age if there's disabilities, or for spouses when there's a spouse that passes away. Some of them qualify and receive surviving spouse payments. The Medicare portion of the tax is also known as a hospital insurance tax. So again, when you turn 65, it's this fund that we've put money into our working lives that provides for some insurance benefits as we are a little bit older in life. The FICA taxes are split 50-50, so you won't see this, but your employer actually pays a match on the amount of tax that is pulled out of your paycheck. So when we dive in here, you'll see the tax rates paid by the employee and then matched by the employer. Social Security's rate is 6.2%. Medicare is 1.45%. And there's a couple of items worth noting. So one thing that I would point out with Social Security and Medicare, they use the same wages as local wages. So if you think back to the very beginning, that W-2 we looked at, the 401k contributions reduced your federal, reduced your state. It's not going to do that for local Social Security or Medicare. So that doesn't get reduced in terms of taxable income. The other big item to point out, if you are fortunate enough to be a high earner, you make over $147,000 a year, the Social Security tax cuts off at that point. So if I made $200,000, 200,000 minus 147, that gap, 53,000 is not taxed at that 6.2%. Only the wages up to 147 are taxed there. Medicare does not have that cap. So I'm going to pay 1.45% regardless all the way through my wages. And in fact, I'll actually, as you see at the bottom of the page, I'm going to pay a little bit more, 0.9%, if I earn wages of 200,000 or more or 250,000 or more if I'm married. So those are some differences and some nuances to know. Here's an example of what that looks like. So basically, looking back, I mentioned our W-2 statement. The 51,967.14 is our baseline, and that is our taxable wage for Social Security and Medicare. And I'm going to take my 6.2%, 1.45%, and apply that to the wages. And there you go. So pretty straightforward calculations in regards to Social Security, Medicare, how we come up with those numbers. And so I wanted to put together kind of a summary. This draws on prior information or prior videos with the federal and the state taxes. But you'll see here, this summarizes our taxable income for various tax purposes. So that's basically the baseline. Here's what you're being taxed on. Taxes owed, so that's what you owe for each individual tax. And then this is the total of all those taxes. So based on our original $55,260 wage, we're paying $9,202.70 in taxes. During the year, you're going to fill out, or actually during the year, your employer is going to withhold wages based on a form that you complete, typically upon hire, a W-4 form. Basically tells them or gives them an indication of how much tax you want withheld from your paycheck for federal taxes. Ohio has a form called IT-4 that does the same thing for state withholding. And there are instructions on those forms that talk a little bit about how to fill them out, what it means, what's going to be withheld. Typically, your local, your Social Security, your Medicare, that's all going to be just withheld at the standard rate. So there's really not a lot to do there. But we are going to look, just at how these taxes are paid. So at the end of the year, you're going to file a tax return based on your prior year's earnings. And, as an example, let's just say that for federal tax purposes, we had $100 pulled out of every paycheck, 26 paychecks in a year. So you'll see here that's $2,600 that we have paid already in tax in advance. The state paycheck, we did $50 and that's $1,300 paid. It's gone. It's out of our paycheck. So at the end of the year, you might remember we did a calculation. We actually owed almost $3,500 in federal taxes. Well, we've already paid $2,600. There's this bucket left of $878.68 that we still owe. So when we file our return, we're going to owe the government. Opposite of that would be the state tax. So if you look, the state tax owed is just a shade under $450. we've already paid 1,300, so we're going to get money back. So that's typically what happens at the end of the year. There's either a refund or you're going to owe money. And how you fill out that W-4 or state-specific form is really what determines that. So you want to pay attention, fill out read the instructions, fill out that form accordingly. Check with a CPA or your employer if you have questions, and hopefully they can help guide you as well. And one final note, you can see at the bottom here, you should not owe for Social Security, Medicare, or local taxes. So as long as your employer is withholding correctly, you should be good. So the last thing we want to look at here is an example paycheck. So this will lead really into our next lesson on budgeting, for people to understand how much money do I have in my take-home pay. So this person had $55,260 in gross wages. And I think a big mistake a lot of people make when they first start out in the working world is, oh, I have all this money. This is what I'm going to have every month, divide it by 12. Doesn't work that way. So first off, there's 24, 26 pay periods. Typically, if you're paid, whether it's twice a month or once every 2 weeks. So your pay is going to be based on that. It's split that way, not monthly. So if you're looking at it that way. The other thing to keep in mind is you have all of these deductions from that paycheck. So we talked about the 401k, the medical, dental, vision, health savings account, and then all of our taxes. So when all is said and done, we actually take home about $1,500 in our paycheck. So significantly less than maybe our gross pay, and just something to note. So that's our annualized take home pay. And as you start to build a budget, that is the number that you're going to use, whether it's monthly or however you want to look at it, that is the number you're working from in terms of your spending. So we'll dive into that in the next lesson, and we'll see you there.